Okay, good afternoon and welcome to the Crowdfunder Community Shares Hangout. As always, we're joined by Dave Boyle from the Community Shares Company, and today we've also been joined by Nicole from the Plunkett Foundation to give us a little bit of expert knowledge on the More Than a Pub Fund, which is available at the moment. So I think obviously we've chosen pubs as a topic because they're very in the news at the moment. In fact, they're going to be on the One show this evening, so where they've hit BBC One prime time, to give you an indication of the level of interest around this. Probably worth me just handing straight into Dave for just a little quick hello and some of the key points, and then we'll go over to Nicole for some of the key points around the More Than the Pub Fund, and then as always we'll open up to your questions. So if you do want to ask a question, if you use the hashtag CFComShares, and then we'll be gathering them and asking and putting them to both Dave and Nicole. So that's hashtag CFComShares, and we'll be monitoring them throughout. So first of all, I'll just hand over to Dave, and he can give a few of the headlines.
Yeah, okay. Thanks, Mark. And thank you for all of those who are watching this live, and for those who are watching it later on. First thing to say about community shares and pub buyouts is that the wider context here, obviously, as everybody will know, is in the UK, pubs are facing challenging circumstances in terms of the numbers of closures, and pubs are being closed for a variety of reasons, not simply that they're facing stiff competition from supermarkets, their tax position, and so on and so forth. There's also the issue that they're valuable assets, which can be more valuable if they're turned into residential property, which is one of the big threats. And linked to that is the whole issue of assets of community value, which many of you who are thinking about pub buyouts, it might be the starting point of your journey, is to register the pub in your community which you're interested in saving or ensuring stays open as an asset of community value. But if that's the way you want to take things forward, then this becomes a next stage, which is how do you actually buy the pub? You're unlikely to get it given to you for £1 on the basis that it needs a lot of work. It tends to have an alternative value on the open market, and it will involve you buying it and paying a significant six-figure sum, which will be a high six-figure sum if you're in parts of the country where residential property values are significant. So to that extent, you need to get your planning in place before or at the time you do the ACV, because if that process works, then at some stage the pub owners are going to offer it and say, do you want to buy it? I say offer. It sounds like it's a bit more gracious than it often is. You will have the legal right to insert yourself into that process, and at that point you'll have to face the challenge of raising significant sums. And the main way that pub groups who've managed to transition from campaigning to keep their pubs open into being the owners of the pub, the main way they've done that is through community shares for a number of reasons. The first one is that the method of funding feels right for the kind of campaign they're running. So the campaign is built on the idea that the pub is the heart of the community, and the community's concern is widespread, and the idea that you'd say that pub really matters to us, what we need to do is find one or two people who can own it on our behalf. By the time the campaign's in full swing, a method of ownership which enables everybody to share in that ownership makes a lot of sense. The fact that those people, because they're sharing in the ownership, become more loyal punters of the pub. They go to the pub more often and spend more money more frequently and get their friends to do so. It helps reinforce the revenues and the trading position of the pub. The other reason is that it's essentially a very cheap way to raise capital. It's not a regulated form of capital, so you can raise money from the general public, from investment, and that's not something you need to spend quite a lot of time and money getting regulatory sign-off from stockbrokers or lawyers or other professionals who can provide that level of assurance. So community shares work very well, but let's put this in context. Nicole, who will be speaking next from the Plunkett Foundation, will have the latest statistics, but there are around 1,500 pubs which have been nominated as assets of community value, and there have been around 30 odd community buyouts of pubs over recent years. It's an increasing rate, and there are more and more coming on stream, but the level of where you've got groups who want to keep a pub open through to groups who've actually bought it, there's a massive divergence between them, and that's why things like the pub programme, which Plunkett are involved in, are really timely, because they can provide the kind of assistance you need if you're going to do the transitioning. So community shares are the main way in which pub groups have done this, and essentially it's hard to see how else a pub group or a community group who looking to keep their pub open will raise the kind of sums they need in the kind of timescales they're working towards. And you know, that's why the journey to pub ownership usually involves a community share issue, and I'd say overwhelmingly involves a community share issue, but there are other elements to that journey, and so I'll pass over to Nicole at the Plunkett Foundation, who can explain some of the bigger picture stuff you'll need to do if you're looking to undertake a buyout.
Okay, thanks, Dave. Really, just to provide some background on the community pub business support program that we've launched, it really came out of the need that we'd identified from groups who were wanting to explore the idea of community ownership of their local pub that was at risk of closing, and a uniquely funded 2-year programme. It's funded by the Department for Communities and Local Government, and also Power to Change. And it's a fairly extensive support package which is designed really to support groups all the way through, from that very early stage of kind of forming and setting up, right through to purchasing the pub, and then obviously opening. There's an extensive package of support available. We have business support, business development support, which can help communities around business planning, around assessing their impact, and around pulling together a community share offer. We also have flexible bursary awards, so that's up to £2,500 to help groups in that early stage of pre-feasibility. So help them have some money in place really to do that initial work when they're setting up. What will probably motivate most of the people listening is that there is a combined loan and grant funding pot available. There is up to £150,000 available. It is a pot that insists that you take some loan funding alongside grant funding, and the kind of equal shares are that the grant funding will not exceed £75,000, but they are flexible, and there is an assessment process that groups will have to go through in order to access that loan and grant. Predominantly what we are looking for when assessing those groups is the level of impact that they are achieving, and the way that they can articulate that impact and demonstrate the impact they're having on their local communities will enable them really to access higher levels of the grant funding available. There is a criteria in place for who is eligible for support. Ultimately, we are looking for groups where there is a genuine commitment to community ownership, and we're looking for groups where they are prepared to release control to the community in decision making. So the kind of structure of one member, one vote. Predominantly we're looking at community benefit societies there, but there are of course other models that we will consider as long as they can demonstrate ticking those boxes. And there are other kind of desirable criteria, but really that's all available on our website and also through our information phone line, so further detail can be provided on what we're looking for and what groups need to do. What's really important is, as groups go through this process, while we can offer support and advice, we are fundamentally looking for them to have raised some finance within their local community. And although the loan and grant funding is available, we are anticipating that there will be a level of community raised finance. And obviously the natural mechanic for that really is community shares. So we are expecting groups to have raised some finance within their community.
Okay, thanks for that, Nicole. Just to remind everyone, if you do have questions, and I'm sure there'll be a number coming in, it's hashtag CFComShares, and we'll collate them. We've had a few come in earlier, and probably worth just picking a couple of the key ones out, as both Dave and Nicole have sort of alluded to. The community shares aspect is really important, and getting a way of raising tangible funds for buying these pubs. Probably the first question, and I know it's a difficult one that we get almost every webinar, Dave, is around, how long do these things take? And I know it's basically how long's a piece of string, but an idea of the process, and perhaps Nicole, you could add in where the Plunkett Foundation and potentially the pub fund could help with this process as well.
Okay, thanks, Mark. It is, unfortunately, as how long's a piece of string. It tends to be governed by the external circumstances of the pub. The pub will probably be being put on the market. It might be under the moratorium under the Localism Act, which will give you around 6 months to get your act together and get funds lodged. And so in many cases there is an externally set deadline, which makes things very difficult in some. So we've heard of community share buyouts which have been very speedily arranged and have taken place over the course of maybe 2 months, where there's been a really committed community effort. That tends to be where there is a really hard and fast deadline, that if we don't raise X amount of money by a certain date, the pub will not exist, and it will be almost impossible to unpick it and repub that property up, and so we're losing something forever, pretty much. Where that isn't the case, it's about how quickly you can pull your team together to do all the necessary work which is entailed. There's usually some form of structural survey which might need to be done, or some kind of assessment of what the market price might be, what work you might need to do as a group to put it in a fit state to reopen as a pub, or to open in a form which meets your aspirations for what you want to do in it. You might want to subtly change the way in which the pub has historically operated, which has some implications for the renovation costs. Then there's the registration of the appropriate legal vehicle, which can take, again, if people have got guns to their heads and the clocks are ticking, you might be able to be really lucky and get that done in 6 weeks, but you should probably allow a little longer, because to some extent there's a debate amongst yourselves as a group about what you want those rules to reflect. And if you do it too quickly, you can repent at your leisure for the clauses you've lumbered yourself with in your constitution. The biggest part, though, is engaging the community to buy the shares. If you spring this on people and they're not aware that there was even a campaign to save the pub or to buy the pub out, your community share offer will not be successful. So there's a campaigning dimension which has a crucial part of it to engage the local community, to address their concerns. Maybe some of them think that the pub, as good as it was, just isn't viable anymore. They've read in the newspapers that pubs are in trouble, and so one of the things you'll have to do is not just persuade people that you can raise the money, but in order to raise the money, you've got to persuade people that the pub does have a viable and vibrant future under community ownership. And that basically is the kind of thing which only happens through legwork. You need to knock on doors, you need to speak with people and engage them so that they get a sense that this pub is not only viable, it's also something which really does care about their voice. It's listening to those people who are going to be asked at some stage in the near future to make significant 4- and 5-figure investments, hopefully, into the fund. And the time to be having arguments or debates with people about whether the pub has a viable future is not 1 week before your share offer closes. It's in the month before your share offer opens, so that by the time the offer's launched, people are really committed and they're excited about what could be possible. And that's one of the things which groups can often forget to do. They're so busy talking to the council about planning permission, they're talking to the owners of the pub about what the terms of the deal will be, they're talking to breweries, they're talking to potential staff. They forget to talk to their community, who are going to be the owners and users of this pub, and help get them to help shape the proposal. And you can never really start that process too early, and it is one of the things which can often be forgotten. It's one of the things I think the pub programme can really help with, because it enables some of the stuff which you might be able to do as a group to be done with some assistance from people who can help you, which frees you up to do the kind of thing which only you can do, which is to engage with your community. You can't pay people to engage with your community and be authentic and to understand what's going on in your area. But if you've got people to help you do some of the other stuff, the surveys, the financial projections, etc., etc., it frees your time up to do what you do best.
Okay, so Nicole, is there anything you'd like to add to those points?
Yeah, I mean, I think I completely agree with Dave's point on, you know, nobody's got a crystal ball, and you never know when you start this process how long it's going to take. And we've got groups that have turned it around really quickly. Equally, we've got groups that we're working with who are possibly into their second year of trying to acquire their pub. So I think the first thing I would say is, if you're going to embrace this challenge, then be prepared that it might be in for the long haul, and it might take a bit of time. I think what Plunkett can offer and what this programme can offer is a really flexible support package, and a package really that we can tailor around a group's need. So we have that very early stage support where we can help a group with an action plan and help them determine the steps that they need to take and kind of what order they need to take them in. We've got a wealth of resources, and those resources have been developed through our experience with groups who've already been there and done it. So we can help with community consultation, and we can signpost and you know, link groups up with other groups that have done it. There are study visits available, so groups can go and see groups that have taken over their pub and are successful, and talk to them and find out perhaps what they would have done differently, or you know, get those tips from from groups that have already succeeded. And then, of course, there's the business development support, which can help with those more technical things. So when it comes to the financial forecasting and the planning, we can provide specialist advice around that to guide a group through that process. When it comes to community shares, again, we can help with that process. And finally, the pre-bursary grants, the bursary awards are set up really that they're there to help fund things like surveys, and just give that kind of vital injection of cash in those early stages, perhaps even before a share off has been run, and a group is kind of self-financing some of those key activities they need to do. But I think really just to stress the beauty of it is we really can tailor what we deliver to what the group needs. And we will work all along the process at all stages with the group to best match their requirements.
Great, thank you very much. I think just to summarise that, the key point in your community, making sure that there is an appetite for this. It's not something that can be done by one person. You do need that wider community, not straight from day one in the setting up of any entities. Through to raising the funds is going to take a large degree of commitment and buy-in from the local community, so that engagement is key. Yeah. As Dave said, then it's down to registering the entity that's going to take on the pub and run it afterwards, and then around developing your business plan, the share offer document, and then again back to marketing and comms and engagement as a way of raising those funds. And as Nicole outlined there is support available. There's also online resources you can use, and depending on the stage of development, there are lots of organisations and Crowdfunder as well have assets around the marketing and engagement stuff, which can be really beneficial even at that early stage. And certainly the inquiries that come to me at Crowdfunder tend to be those early people saying, how do I start this? So there's a variety of things we can do to that. And I think Dave's just got one more thing he'd like to say on this.
The other thing, I mean, whilst the grant programme is superb and it really does fill a much needed gap, I wouldn't also, I would urge everybody to think about small scale crowdfunding as part of testing whether the community really gives as much of a stuff about this pub as you hope and think they will. At some stage you're going to have to find out whether people are prepared to invest maybe 200,000, maybe more like 400,000 to help make this project come to fruition. And I've worked with some groups who I think have had a sneaky suspicion that not everybody thinks this pub is as great and as necessary as they do, and they put off the evil day where they have to launch it because they have a sneaky suspicion that it might not be as well thought through, and they keep thinking if we get some more grants in and we do some more work, that might make our project a little bit more viable in the eyes of our community. And I don't think there's any substitute for finding out as soon as you can whether this is a small group of people who love the pub, but not everybody feels the same way. That doesn't mean if you're not successful you knock it on the head. It just gives you a reality check, and reality checks are really important because if you're going to make this work, there is no way around the fact that lots of people are going to have to do quite a lot of voluntary work to make it happen. And you need to know that not only have you got a chance of success, but you need to know you've got people with you, that when you turn to your community and say, okay people, let's make this happen, it's not going to fall like Wile E. Coyote off the edge of a cliff. And knowing that you've got that support in the bag is a real source of strength through the process. And by combos, if you haven't really got that support at this stage, it's better to find out at the very earliest opportunity than after wasting your time and maybe lots of grant funding on a project which realistically doesn't have many legs. And conversely, if you have done a small-scale crowdfund to maybe get some initial work done, I think that was the sort of thing which might stand you in good stead for any applications you might make to funders, because you've got tangible evidence of community support for what you're doing. But it's just to be mindful that one of the great things about the work the Plunkett Foundation have done with things like the Localism Act and ACVs is it's made it very easy to put an ACV on a pub. You don't have to be particularly well structured as a group. You can do it as just 21 local residents, which is fantastic for getting the ACV in place. But it also means that you don't necessarily have to go out to the wider community to trigger that process, and so you can beaver away internally without really making it without really making much of a case in your community. So don't neglect the opportunity to do that, because at some stage, if you don't have that support, then you're going to find out, and you're better finding out earlier than later.
Okay, thank you very much. Another question coming in, again, just to remind people that it's hashtag CFComShares. If you'd like to ask anything specific of either Dave or Nicole. Somebody's asked the question, can I expect a financial return, or should I expect to offer a financial return on my offer? Again, I'm happy for, I'm sure whether Dave or Nicole want to take this, or maybe both of you will have an opinion, I'm sure.
Well, Nicole, I went first last time, so Nicole should go first this time.
Well, in terms of the advice that we give to the groups that we work with, particularly in terms of community shares, the financial return is not really the key to investing. People need to invest because they're looking for a kind of a better social motive. We do allow some interest payable, and that's really a low rate of interest, and the FCA do have some views on how much interest is allowed to be payable on a community share offer. So really our suggestion is always that that is capped at quite a low level, and it's really to maintain engagement rather than act as any kind of major financial incentive to invest. Okay.
I'd add one point to it. I think there's a subtle difference between making money on your investments or a return and can you get your money back. So societies can allow withdrawal of shares, which means that you could say in 5 years' time, I now could do with the, I don't know, the £1,000 I invested 5 years ago. Is there any chance I can have it back? If the pub's doing well and it's got trading surpluses to justify it, you would be able to maybe withdraw that money, But obviously the thing you do there is you incentivize your investors and say the best chance you've got of being able to do that in 5 years' time is if the pub is successful. So, you know, how many parties have you held in the pub? How many people have you told to come and try the great food in the pub? Are you actively working to make it a success? The other factor as well is that because you've probably bought a piece of property, if in the final analysis the pub doesn't work, then you've bought a share in an organisation which owns an asset which will then be sold. And after the satisfaction of all the debtors or the creditors, investment is able to be repaid up to the value of that investment. So if you've invested £1,000, you'll never get more than £1,000 back. You might get less, but because you've actually bought a piece of bricks and mortar which will have some value, you might be able to get your money back. But just to underscore what Nicole said, the return is often social. So if you live in a community and you know that you're 5 miles from the nearest pub, if this pub actually closes, you think of your return in terms of all those times where you can walk back from the pub at 11:30 at night rather than have to get a taxi or whatever other means you use. So it's about how it changes the life you live in the community you live, rather than the way your bank balance is looking much better for the fact that you've invested in this particular pub.
Okay, thank you very much. So there's probably 2 questions leading on from this quite nicely. We'll separate them because they're both going to be relatively detailed answers, I expect. The first one, I don't know. I'll go with the easier one of the 2, I think, which is someone saying that they're worried that if people buy shares in their pub, that they'll then go on to sell them and they'll have no control over that. Dave, I think you've started to answer that question, but I think probably good to finish that off in terms of that confidence.
One of the key factors of community shares is that they're withdrawable rather than transferable. So the only time you can pass the shares on, if you've done a community share issue, is upon your death to those who you bequeath them to. Under any other circumstances, they cannot be transferred. So the 100 people who happen to live in your community, or the 1,000 people who happen to live in your community who invest, they will be remain the 1,000 shareholders until they withdraw from membership. New people can come in, but again, that's the board of the society is able to choose who to accept money from. So you're not in this position where, unbeknownst to you, a bunch of people sell their shares to Mr. Burns from The Simpsons, who wants to turn it into a housing estate. That just can't happen. And indeed, if you provided that opportunity to your investors, the community share offer would become much more heavily regulated by the Financial Conduct Authority, and suddenly your costs of raising the money just have gone through the roof.
Okay. Thank you very much. Always an interesting question that comes in is around the dreaded tax. So a question that's come in is, is a community pub exempt from tax? I think there's never a simple answer with tax, but if anyone would like to field that. I'm
going to let you take that, Dave.
Okay, I mean, no, tax is the price you pay for being damn good at the business you're in. The only way to not pay any tax as a community-owned pub is to not have enough profits, which is, yay, no tax, and boo, we're going out of business because you've not made any surpluses. So, no, there are no tax breaks which are available for the pub as a whole. Pubs are not yet recognised as a charitable activity. I'm sure there are many, many people who would love to try and push that one through the charity object, but it's not going to happen anytime soon until we can break the link with cirrhosis of the liver. So, but there are individual tax breaks which are available to investors in community share offers, which vary depending on your circumstances. So there's 3: social investment tax relief, which will be available to investors if you're in a community benefit society with a statutory asset lock. Ask us about that later. That will be 30% off the investment to the investor off their next year's tax bill. Potentially, if you might be able to use Seed Enterprise Investment Scheme Relief, which is a super duper one, which gives 50% of the relief back to the investor. So if you invested £1,000, you'll get 500 off your tax bill in the next year, which really starts to incentivise people to either think less about the financial return they may or may not get, or even better, doubling what they might actually be able to invest in the first place. And then there's another relief called Enterprise Investment Scheme Relief, which enables investors to get 30% tax relief. You need to think through those though, because if you're planning to run your pub as a managed pub where you get a landlord in and you essentially act like a pub company yourselves, and you find a tenant who runs the pub and takes all the risk, then you wouldn't be eligible for certainly not for EIS and SEIS tax reliefs. You might be eligible for SITR with some fancy footwork, but it does have an impact on the way you run the pub. So it's not just a case of the tax break would be great. It has implications for the next 3 years of your operation. So you need to think through whether you want to live with those implications, because you might find yourself wishing you'd never bothered to try and bust a gut to get that tax break. But the pub itself isn't able to get any, because the activity is just normal trade and doesn't attract any special favours. Though, if you have a very nice council, they might be able to extend discretionary rate relief of 80% to you if you're a community benefit society with a statutory asset lock. Though, realistically, councils are running out of the financial resources to be nice in the way that they might want to be able to.
Okay, thanks, Dave. A very sort of expansive answer there. Lots of things to think about, and probably lots more questions that perhaps we won't have enough time this week to answer them all, but we'll certainly try and provide ways of people finding further information. So another couple of questions that have come in. One, which is particularly relevant, going back to one of the very early points made, which was how do I register as an asset of community value? So something I think will probably be playing on a lot of people who are watching's mind. So I don't know, Nicole, are you comfortable with that one?
Take that. So what they need to do is speak to their local council. There will be a process in place, but each council is responsible for managing that process in their area. It should be on their website, so you should be able to find it fairly simply in your area. There are different stages to the process, so in order to get the listing, there is normally a form that needs completing, and I believe you need over 21 people to express that they want to list that asset, and there will be they will need to specify the reasons why it needs to be an asset of community value. And then once that process has been through, you will receive a decision from the council. They will then it will effectively sit on their website as an asset that is listed. It can be done really before an asset is put up for sale, so it can be done on anything now. It doesn't have to be put up for sale in order to be listed. And at the point that an asset is put on the open market, that triggers a moratorium period. The moratorium period in total is 6 months, but there is an initial moratorium period of 6 weeks, which gives groups 6 weeks effectively to register an interest, decide that they want to go ahead and prepare a formal bid for that asset. And they need to notify their council in writing that they wish to do so within the 6-week period. The other thing to bear in mind is that there are certain structures that are able to conclude on that process and go through to making a bid. Again, that will all be outlined on the guidance notes that are available, and again, we can offer support on that. So if groups have any questions, they can contact our advice line. But a group does need to be an incorporated legal structure at the point that they, after the 6-week period, where they want to trigger a full moratorium, which will take them to the full 6 months. So they have 6 weeks to make their mind up, but after those 6 weeks, if they decide that they want to go ahead to a full moratorium, there is a specific legal structure that they will need to be, and they are listed.
Great, thank you very much. Also, I believe there's if you Google list your local, there's a good guide there to sort of go that outlines some of the processes and some of the key questions that you might have if you're at the early stage of this. A couple more questions that have come in. I'll just remind everyone that if you do want to ask one, we've maybe got time for one or two more. It's hashtag CFComShares. But last sort of couple that I've got at the moment. One is, if the building's already been sold, is it too late to do anything about it, or is there still options available?
Yeah. I mean, there's one of the first things to say, and it follows on neatly from the ACV question, is that if the pub is still open and trading, it is so much easier to get an ACV on it because it exists. It is providing community benefit. It meets the tests in the law. If the pub has closed, you then open up the biggest angle of attack which the owner will use to try and stop an ACV and indeed community ownership will be that it just wasn't viable. So you get into this horrible debate about whether the pub has a future or not, which is completely sidestepped if the pub is still trading and you love it and you don't want it to disappear. Then put an ACV on it whilst it's still open. But once the pub's been sold, the council are able to take a view that they concur with the property owners that this pub was an ex-pub gone to join the choir almighty, and they're not going to allow it to have an ACV. And once it's got not got an ACV on it, it again triggers. You will need a change of use if you're an owner of that pub who wants to turn it into something else. Whereas if it's got an ACV, it removes what are called permitted development rights for the pub, which means that even demolishing it or changing it into another retail outlet, a supermarket, sort of express variety, will need planning permission, which gives the community an opportunity to object and to make the case. Realistically, though, once the pub is sold, it's been bought by somebody who wants to do something. If it's been bought by another pub company or somebody who wants to give it a go as a pub or something like it, happy days. Normally, though, groups are concerned when it's bought by property developers or retail groups who are looking to offer it for another retail usage. And once it's already been sold, your ability to actually buy it is yes, everything's available on the open market in a free society, but the chances are they're looking at some kind of gain, which is, turn one pub you've bought for £300,000 into 3 flats, each worth £250,000 each. You're looking at a significant capital gain as a developer, and that's the reality you're looking to deal with. So yeah, I'm sure they'd sell it to you, but you'd have to pay about 3 times over the odds for what it was as a pub, unless you can get an ACV applied to it still. Now, the critical phrase there in the law is in the recent past. And whilst the appeals which have been made make it abundantly clear it's for each council to decide what the recent past will be, in reality it's unlikely to be an incredibly long time. So if the pub closed in the last 6 months, you should be okay. Pushing 2 years, I've seen councils say 2 years is not the recent past. Others have treated it as 5 years. There's no hard and fast rule. So you'd have to look at what the local authority in your area has sort of set precedents to do. But once it's actually been sold without the ACV, your chances seem to me to be limited. Other than campaigning about the pub can change the reality. It can make it seem what might have looked like a pub which was slowly going downhill. You can reboot it. It can bring people out of the woodwork who maybe have more resources than you. So it doesn't end up in community ownership, but it ends up with some kind of facility. So there's a pub near me where the pub was sold, an asset of community value status was put on the pub afterwards. That frustrated the planning position, but instead the pub downstairs has been reopened as a community cafe with a band space and an art space. So there's still a facility in the area. It's not a community-owned pub, but also it's not 5 flats. which was the original plan. So, you know, you can still be involved in determining what does and doesn't happen to it. It just gets quite a lot harder, and the end goal of community ownership certainly gets harder without that, without, you know, when it's been bought by somebody who probably wants to do something with it which doesn't involve reopening it as a pub.
Okay, thank you very much. So just got a couple more questions. One around what are the main benefits of a community share offer versus a loan? I think, Nicole, you mentioned that within the Plunkett, more than the pub funding, there is that mixture of loan and grant and the addition of community shares, but this was specifically rather than a loan.
I think in terms of finance, I think the entry costs now for groups are fairly high, and that I think, you know, we would encourage all groups to have a mixed financial package of funding available. I think in terms of what the key advantages are, a community share offer really determines that community engagement, and if you can raise funds within the community, it really establishes that that community is behind what you're trying to achieve, and actually they will have a stake going forward in it. So for us, I think the beauty of the mechanism is that it really does tie in those members of the community, and it means that they're sort of putting their money where their mouth is, if you like. They're saying that they support your enterprise and your ideas, and then going forward when you're trading, they've got a reason to engage with it because they're invested with it. I think we're also realistic that actually many of the groups we work with now cannot solely rely on a community share offer. So, you know, sometimes a loan package is necessary as well, but I would say if you can raise, you know, a significant sum through community shares, then that gives you that buy-in, and it also gives you more control over your enterprise, really.
Okay, thanks, Dave. Anything you would add to that, or?
Yeah, I mean that's one of the key points. If you get a loan, it's like that scene in Goodfellas, which involves swearing, so I won't actually repeat it. But it's where Henry explains what the problem of having Paulie the gangster as your business partner is in relation to whether you can afford to pay them back or not. But essentially, that's the trouble with loans. It is essentially vicarious. If you don't meet your loan repayments, are the people to whom you owe money going to extend you a degree of goodwill or work to help you repay those loans, when ultimately, if they don't get repaid, they can take control of the entire pub and sell it for housing? So, you know, you don't have as many people coming to your AGM, but you don't have many friends who can help you through the bad times in the same way as well. And also, the more capital you can provide from the community, not only does it testify to the support for the pub, which can make you a much more attractive prospect for loans. Also, by de-risking it and putting some risk capital in there, you increase the likelihood that you will get some loans as well. So I think, you know, to underscore what Nicole says, in reality, the property values which are occurring in many parts of the country, which make a community share buyout of the whole thing lock, stock and barrel increasingly difficult to do. So it's not really a case of loans versus shares. It's more a case of what's the mix and proportion between those two, which is comfortable for you, which starts to put you into the whole issue of interest rates, term rates. Because you're hopefully going to be buying a property, you can look at mortgage style time repayments, which, yeah, you're in debt for 30 years, but the actual annual repayments might not be that high. The other thing to throw in is that because the kind of institutions you will probably be getting loan finance from will have a really good look at your business plan, the fact that people who spend their lives looking at business propositions think that you're worth lending money to can be a badge of confidence for the investors who you're looking to get on board. You know, some credible and competent people have checked, and that your sums do indeed stack up, and it's worth investing on that basis.
Okay, there's two more questions. One we're probably not going to have time to answer in detail. So we've had the question about what are the different types of organisations that could take over ownership of a pub, and I know they'll be very varied and probably want to direct. Obviously, there are only certain types of entity that can offer community shares, and we do have a previous webinar on the Crowdfunder site in the community shares section on the basics of community shares. But is there any key points that Dave or Nicole you'd like to highlight around the types of organisations people should consider?
Well, Nicole can speak about the split between cooperative and community benefit societies within the existing community pub sector, but the other third option is a charitable community benefit society, very unlikely to fly here for the simple reasons I mentioned earlier, that owning a pub is not a charitable object. If you worked very, very hard to say that by owning a pub we can do all sorts of good things and there are no bad things and we distribute the money to do loads of wonderful things in our community, you might have a tiny chance. But it's the fact that you know most of the money which flows into the charitable purposes will be generated from the sale of a poison, kind of kiboshes the charitable community benefit society route. So that leaves you with the cooperative society or a community benefit society, and different groups have taken different routes, and Nicole's got better experience of sort of what the contours of that decision might be.
Yeah, I mean, I think in terms of that decision, the majority of the groups that Plunkett work with have gone down the community benefit society route, and that is the route where they have decided that effectively their trading activity, any surplus that they receive, they will put back into community, put back into the community and support the community. There are groups trading as a bona fide cooperative. Again, we wouldn't. It's really the group's decision, and we would provide as much support and advice as we can around that as to kind of what the key differences are. But that's something really that the community and the steering group need to decide as and when they do those consultations. And it really does go back to kind of the legal structure and the governance structure that goes behind, and what the steering group management committee are trying to do at the end of the day through that enterprise. There isn't a right and wrong answer. It's more about what their objectives are as a group. There are some structures that can be supported under the pubs programme, and some structures that we would struggle to support under it because of the criteria. But again, we can talk groups through that, and representatives of groups through that if they make contact with us.
Okay, great. Thank you very much. The final question actually rounds us off probably quite nicely. There's no others coming in at the moment. So the final question is around if I want to start this, where do I go first? So should it be coming to Dave or to Plunkett or anywhere else? So I think if there's any key points that perhaps you could direct people to as a starting point, that'd be great based on your experiences. So I don't know who wants to go first. Dave, should we go with you, and then we can perhaps round up quite nicely with Nicole.
I'll be really quick. Anybody looking to do this should be going to the Plunkett Foundation webpage and googling the pub or finding the pubs program, because it's yes, you could spend ages finding stuff out yourself, or you could just go to some people who are being paid to help you, and it would be dumb not to. In terms of the support we can provide at Crowdfunder and the Community Shares Company, to some extent, whilst we can do lots of those things, Plunkett have got all of the requisite expertise on tap, but we can help with the Community Shares dimension for that, and the Community Shares Company is on Plunkett's roster of providers, so we may end up working with you through that route, but really all roads lead to Woodstock.
Thank you, Dave. So yeah, they can contact us through our advice line. Number is on our website, or we do have an online inquiry form on our website. If you happen to be watching this in the middle of the night and you might not get anybody, you can make that application online, and we will pick it up when we can and respond.
Okay, great. So I think that's quite a logical place to wrap it up. We will be putting a blog up relating to this webinar, and on there we'll include links to Plunkett. We'll also add in the list your local link as well, and encourage people, as Nicole said quite rightly there, to get in touch with Plunkett Foundation and ask questions around the pub fund. And I guess it just remains, Dave or Nicole, if there's anything else you'd like to say, just to other than thank you, and then we'll wrap it up, I think.
Cheers, folks.
Thank you.
Good luck to everybody who's doing this.
Yeah. So thank you very much for joining us, and as I say, we'll put a blog up with relevant links, but Google or other search providers are available. We'll always direct you to Plunkett to find out some key questions. So thank you very much for joining us, and we hope you found it useful.